Hi guys, welcome to the Savvy Money Show. Me, host Sean. Now, we're going to start with going over something I spoke about before. Ticker symbol Shin. Now, they sold, well, apparently they've sold $1.97 billion of their assets to T-Mobile. Some of that goes to pay down debt, and the rest of it will go to pay $18 a share once the transfer is complete to the shareholders in the form of a special dividend. I spoke about that before. You have to decide whether or not it's worth it to you to hold. Another company I've been looking at, Liberty Health Sciences. Basically, this company has a lot of products, let's just say in the MJ market. I'm sure you know what that is, and you can see it's been improving its balance sheet recently, and its current assets outweigh its total liabilities. And I think it has just had an agreement signed with another company, and I think it has a good future ahead of it. I think this is one that can soar. And just so that you see, it is only in Florida at the moment, but I think you need to check it yourself. As you can see here, it does the flour, capsules, concentrates and distillates, all solutions, the vaporizers and topicals and transdermals. Sorry about that. I have 250,000 square feet of growing and production facilities. They do the medical MJ and a number of other things. I do think this is one to watch, and one that isn't as good in my opinion, but it could become. Remember, data companies are really good, hot stuff at the moment, and to find one with a PE ratio of 7.58, which shows it's profitable, is this lower price is quite something. Now we can see again they've been improving their assets. Basically, as you can see there, their current assets outweighed their current liabilities beginning last year. However, their total liabilities used to outweigh their total assets. Now it's the other way around. So they have 7 million to spare, and they're growing their assets all the time. The next stage for them is to bring down their debt. I think they're heading in the right direction, and if you look into them, they have a lot of big name companies on their books, such as Shell, Red Cross, so many name brands on their books, and I do think it's one to look into. Now, decarbonisation plus acquisition. I spoke about it a week or two ago. Hopefully you got in. I missed the boat. However, I will be looking to get into it soon, as soon as possible, because although it soared 25%, on Friday and remain 21% higher. They have an agreement to merge with hydrogen fuel cell truck maker Hyzon Motors. Now, what it doesn't say is that it launched in 2019 and delivered 400 commercial vehicles in 2019 alone. Now, I did a video on Total and a video on bankruptcies before. How Total, difference between Chapter 11 Chapter 7 bankruptcies, how Total declared bankruptcy so they could convert to renewable energy, and during that period they didn't want a takeover approach, so that was to protect them. Total is now one of the most renewable oil giants in the world, and it's good that they have them as an investor. I think the fact that they're producing 400 of them, remember Nikola wasn't producing anything, and look how high they went. As well as that, they're not only doing trucks, they're also doing buses as well. But trucks is what makes a moolah, as I should say. It's gone up to 1650. I still think it's a good price. Again, I mean, look at what happened with Churchill Capital. Anyway, I'm looking into YGMZ Logistics Holdings. I think it has come down quite a bit from where it was, and I think it's primed to have a turnaround. If you look at the financials, you can see that it's current assets outweigh the total liabilities. So I think this is one that, even if it doesn't have a turnaround anytime soon, it's not going to be too bad. It has had a 14% return on equity, so I think it's worth it. One I spoke about before, United States Anti-Money Corporation, it's had a tiny run up and then an instant pullback, and I think still due a better run up. It's at 187% share price gain in the last year, but I do think it is one that we should be looking for a turnaround, and the financials don't look great, but the total assets outweigh the total liabilities, and it's only the current liabilities, and they can be converted. It is a gold and silver mining company. I'm also looking into Parcel Power Technology. This is a company that actually links up companies with same-day delivery couriers. Now, only 25% of customers say they would pay more for same-day delivery. Only 72% of 72% of companies do not offer it at the moment. So I think it is one that could actually do well at the moment, and you will see how, if you look at it, if you look at the assets to liabilities, it doesn't look the best. It looks okay, but not the best. But it has completed an offering recently for 500,000, which wipes off the debt, and so basically the debt is gone, and you can see there the debt was 948,000, now the liability is 2,000, and same with non-current liabilities. It's gone down. Sorry, 948 million down to 2 million, and same with total liabilities. And is apparently opened up a $5 million line of credit, which should see it through. Now, the thing is, this is a lot of these are OTC stocks, so they are fairly risky, so they could go either way, and I would urge you to do your own due diligence.